Hey, welcome everyone. It's Rob. Let's go ahead and make sure all can hear me. If you'd please type the number one in the chat box, let me know that you can. I would greatly appreciate it. Morning and good afternoon, everybody. All right. Yep, Jim, I appreciate the heads up on that. See, Power Hour slide. Have you started? Yep, Drawn Tools has started. Thank you. Camera's not working. I had all kinds of problems today with Zoom, and we're having another one now where it's not recognizing my camera. I didn't try that earlier today in a meeting. I couldn't get audio, restarted, couldn't get share, restarted. My speaker didn't work. Only in Zoom, restarted. So I don't know if it's this new update, and then I just went to use the camera and nothing there. So sorry about that. We will be flying without camera today. That's right. Y'all know what I look like. My pretty face is right there. So as we do get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. Let me just make sure I got volume off on my phone because it has blown up a bit today with us hitting what we did on the S&P. So today's Power Hour agenda, we're going to go with the follow us, which will come up in a moment. Then today's trades, economic reports, market review, upcoming trainings, weekly topic, and then your stock reviews. Make sure you've got your candidates ready for us to rock on with. All right. So when we look at our follow us page, this is it. I mean, this is it right there, right? So make sure you are following along. We put a ton of great content out there. We'll slow down a little bit with holidays, but not much. Christmas week, we're off. We're not doing any recording this week. And you can mark note of that for your calendars. This week, Friday, Thursday, we are closed for the holiday. Friday, we are not open. Unless it's an emergency, we'll be there to help until 1 o'clock. Staff will be in, part of the staff will be in on Friday, some will not. And then Christmas, we will be taking a week of Christmas off this year, as we normally do. That's a regular vacation week for us. So for me, the big part of that, the last 2 weeks of December are not big trading weeks for me. Thanksgiving week is not a big trading week for me, although I am a big fan of selling positions right here, which we'll talk about in a moment. All right, from here, let's move into today's trade. So what trades did y'all do? Drop them in. Now, we do have a lighter group here today, and I'm not surprised. I already knew there were a bunch of people who were traveling this week. But go ahead and drop that in. What trades did you want to what trades did you do today? Now we want to look at what trades did you do? They could be trades that you've taken today. You could have taken them Thursday or Friday. That's okay. I mean, it is a Monday, right? There you go. Will said Coinbase, $415. I love it. Coinbase is a great candidate today, wasn't it, Will? Plus others, I'm sure, Will. I doubt you would do just one trade. But nice job on that, $415. Jim said didn't get any trades off this morning. Stephanie said volume was kind of light on the ones I wanted to trade, so I stayed out, and that's indicative of this week, right? They said just huge travel week this week. About 80 million people are traveling this holiday. So I guess Wednesday on airplanes supposed to be a record for us in the U.S. Trip said 29.6% on AMD. Let's see. John said naked puts on NVIDIA, ANF, Amcami. Cash flow of $1,300. Nice. Jennifer said 1440 on Amazon. Coinbase 135 was higher but dropping, so I got out. Okay. All right. And Jennifer said congrats to everyone. For me, it was just one trade today. And again, Mondays are always a busy day. But Will and I are on the same page. Great minds think alike. So Coinbase gapped up, right? So let's go look at this Coinbase setup. And keep something in mind. This segment right here, every one of you should be jotting down whatever other trade somebody else did today, right? And you should be going and analyzing those charts and said, what was it that told them, oh, get in here, get in here, get in here? What triggered it, right? Use it as a learning tool. You got all of these traders that are out there professing we just did this, right? Take advantage of that, right? Capitalize on that. I'm going to take it a step further, which I normally do, and I'm going to show you exactly what I looked at and why I took the trade, right? So Coinbase took a gap up today. Now keep in mind on TradeStation, I've got 4 windows. I've got a 1, a 5, a 30, and a daily chart, right? So I'm watching all of these at one time on TradeStation, Okay. And you can break your windows up on them, make sure it's the exact same way. Let me make this a bit smaller. I don't need this that big. All right. So I always like to keep the pivot open on the chart. So here's the gap up this morning. Let's get that out of the way. Here's the gap up this morning from the previous close right there. And what happened? We had immediate pullback, a little bit of wiggle in there, pull back, and then plunk. We blew right through. We blew through the fib line that's there. This was the 300 line. We blew through the fib line as well. We pushed up, and as we got up through the fib, the 297 and jingle, I can't see the exact number with the drawing tools on. We got up through there. What happened? How did it react? As it got to the 300, how did it react, right? So let's go take a look. Go over to a 1 minute, right? And here we are. So let's get rid of that crosshair. So here's the fall that took place, and then we just went right? We got no bounce in here at all. So what happened here? We moved up, and I'm going to have to take the drawing tools off. This line is at 297 and a half, 297.50, call it, right? 297.46 is too hard to remember for me. 50. So where was our close on this? So we had 296 and a half. Our close was 298 and 3/4, right? So $2.50 above is where we closed. All right, I like it. Now we're looking for the pullback, and we got it. We got the pullback in there and the bounce. Now this is a 1 minute candle, so it pulled back and it bounced. As it did, there's the entry. The bounce gives you the opportunity to take the entry. 298 and a half, 299. You might have waited until you got above 300, maybe got to 301, wherever you chose to do it. I got in a little bit earlier. Again, everything we talk is not funded. I got in a little bit earlier than that. So right around that 298 level, because we're at the 298.9 level, sorry, 299 level, realizing that my 300 was right above head. My stop was extremely tight, uber tight in there, that if it did break to the downside, I'd be out. And I'm not walking away. I'm watching this as it happens. Keep in mind, this is at 10:20 this morning. So we're not even open an hour yet. We moved back up. We even pulled down to the 300 and we bounced. So let's say you didn't take it at 299, you took it at 301. Right? We ran up, and look at what the market did. And this is what you've got to analyze, folks. And this somewhat we talked about in our inner circle meeting the other evening. Right, we had this great move up and we started to float sideways. If you would have said, you know what, I'm pulling it right there. It's not really at 310. It was lower than that. And that's probably like 308, let's call it, right? So you got in at 301, you got out about 308. Say you got out at 307, right? As it pulled back a little bit, you got in at 301. So you got a $6 move there on the stock. If you got a 70 delta, that's about a $5 move on the option price, right? Really not horrible whatsoever. Not at all, right? But we did get into a flag and pennant type pattern here, right? So we had that move up, and then we just kind of, top was going down, the bottom was holding like a flag, right? The just holding up there, right? You get a little bit of a wave there, and then we get the breakout, right? When it breaks out, we move up, we get into the sideways pattern again, and you may have pulled out there. So instead of getting out at 308, you got out at 313, 314, 312, call it 312. And you got in at 301, and you got out at 312, right? So you got an $11 move in there. $11, you're now sitting, if you started at a 70 delta, you're now looking at an 85 or 90 delta. Let's just call it an 80 delta to make life easy. 8 times 11, 960, you're about 10 bucks. You're about $10 move on your option there, right? Now, their options are not cheap, don't get me wrong, okay? We have one more leg up, and then we start getting into the lunchtime area. We're at 11:30 over here and the likes, right? So you may have taken the trade off here or here or here, let it run, put a trailing stop on it, whatever methodology that you used, right? Whatever methodology that you used to exit out of that trade, this is exactly, and I mean exactly what I'm looking for, right? If I go back to a 5-minute candle, right, you could see the run, and this is what I am focused on, not the one at this point, on the 5s. The one, there's a tweak to get me in. The ones right here told me, because of the way it moved between these two candles, the way it moved on that 5-minute, primarily on this one, right? Then we made our move up, and we went sideways, we legged up, and then we start giving lower highs. High, lower high, lower high, and we roll over. Done. 314 or so, I'm out of that position. I said at 299 was the entry to 314. That's $15 with an 80 delta. That's $12 move. Yeah, it's about a $12 move on the option price, is what it was, right? PK said perfecto setup. Exactly. And that's just it. So I did one trade today. It was a great setup. It fit my risk. Did I run a little risk around the 300 level today? Yes, but I was planning on that. Absolutely knew there was risk there, but I was willing to accept that risk. Did I do as many contracts as normal? No, it's Thanksgiving week. I ain't trading that way. I am not one to throw money out there. I am not the guy to stand on a mountain and say, please, please, please go up. I'm willing to risk this. Please, please, please. No, no. When someone says, oh, you're very lucky, you're good at this stuff, you probably had a great education and you had all this money to get started with. No. When someone says you grew up with a silver spoon in your mouth, barely had a spoon, and if I did, it was plastic. All right. The last thing we had was money growing up. My mom, there were three of us, three boys. Y'all have seen me. I'm a big dude, right? I was the smallest of the three of us, right? We could eat. We had pasta 5 nights a week, not because we loved it. It's good. Mom made good sauce, Italian, so she made good sauce, but it cost $1 for 4 of us to eat, right? Mom and dad were separated. Okay, so no silver spoon, no good in school. C student was the best I could do. I usually cut out of most classes that were not shop, right? Period, the end, right? The bottom line is I know my risk and I know what I'm willing to accept. I know this week there are risks trading this week because of the holiday, lighter volume. You could get whips that go up or down. I'm not willing to take that kind of risk with my money. So I will put less money in a trade, back away a little bit, come back into the game again next week when we start picking up again. Now, are there advantages to today of trading versus waiting till next week? Yeah, covered calls. Duzibazzo, Italian phrase, crazy in the head, right? Basically, is the translation my mother-in-law uses all the time with the finger pointing and shaking on her temple. Crazy in the head, right? What I'm referencing here is crazy in the head. I'm not going to take the chance on taking a risky trade. I'm not going to take a chance on anything that brings greater risk to me. I want to do as little as I can risk-wise. So that means my setups need to be sweet or I'm not taking them. Sure. Brandon said, where's the fibs drawn on the daily chart? So let's see. Trip said free and pseudo free theta burn this week. Exactly. So because of covered calls this week, because of the holiday, you're giving up 1.5 days of theta burn automatically. You're getting it for free, right? So it just the theta and the options price is going to go away just because the day is a holiday and a half, right? Thursday and half day Friday. So I am drawn on this, Brenda, from November 4th up till and including November 11th. All right. Yeah, exactly. Jim said Coinbase 10:45 11 o'clock. You would consider this a rising 3 with only 4 candles, too bearish. Let's see. 10 o'clock. Wait. 10:45. Okay, I'm like, nothing at 10 o'clock there. So 10:45. Now, I mean, it's got the pattern. So what Jim is talking about is this candle here is the first candle, 10:45. This is the second candle, rising 3, you get this pullback. Kind of, I mean, you got all of this big, I looked at it more of this way, Jim. Because I had this big thrusting pattern, I'm going to be okay with a little bit of a pullback and I'm looking for the bounce, right? And if we go over to volume, let me bring this in now. I don't think I have it set up on. Wait, what in the world happened? How did I wind up with, oh, I know why, because I changed templates. I don't know why this keeps doing this to me. Oh, I know. Let's see. All right, this is template number 1. Let's go up here, change it to a 5-minute candle. I don't know how I did that. All right, so this is Coinbase. Okay, so now Let's go back over here. And, oh, let's go back to the 5-minute. Got it. So now let's go look at the 1045, right? So this thrusting pattern here, I'm okay with a little bit of a pullback and this bounce. As we can see, and it's going to be really hard for me to mark this. So this bullish candle right here, I don't know if I can apply this to the bottom there. Can I? Yeah. Yeah, but I can't. Let me try this. I don't normally put things, markings on indicators like volume right here. Right? So that volume right there, you could see and that volume right there, by the way, was this candle. Pretty sure. Let's see. Right? Yeah. So you see, that's the candle right there. So you see the red arrow down, that's the volume. We had greater volume coming up the previous candle. We had a smaller candle with lower volume in there. We got some pullback on the next two candles and the volume was lighter. The signal was already there. The signal was already there. Okay. That volume is lightening up. Okay, so that might have been enough for you to say, you know what, I'm done. I'm out of this trade. We got our bounce here on this candle, and let's just mark it up, right? So we got our bounce on this candle. Ooh, not the one I liked to use. We got our bounce on this candle, which takes us, I have to physically hit close on that one, which takes us to this green candle here down on the bottom. Ugh, did it again. Wrong indicator for me. All right. Takes me to that green candle, that green volume bar on the bottom. And then what happened? The next candle, we get a big, actually it was a little doji type candle there. We get lighter volume. We get bigger volume on the way up. And then you can see the volume just drops off drastically. So compare this high of volume right here, right, when we had that high. And by the time we got to the first arrow, we already were lower. We had a little bit higher volume here than the previous peak. So that was still enough strength to say, ooh, let's stick it out. And then you can see in here, we just started to fall apart, right? And at that point, we're getting bearish candle, little bounce, bearish candle, volume lightening up drastically. Time to go. Time to go, right? Right? Just period the end, we're done. Okay? So you're welcome, Jim. I mean, when we look at, but that thrusting pattern, Jim, to me was enough to call it stronger than a rising 3 pattern, which didn't truly materialize in there, but it's a stronger pattern. But what I just shared with you, that's exactly what I'm looking at. There's a lot of little arrows on here. Okay. That's exactly what I'm looking at when I look for these positions. Was that helpful to walk through that way? Give me a 1 for yes or 2 for no. If you're like, Rob, I already know that stuff. That's okay. Give me a 2. My goal is pretty simple. To try to deliver the best information, the best knowledge that I can to you through this training. So this is a give back day for me. Always has been. I'm going to share with you something from a friend of mine, my trading buddy. The people in Inner Circle have already heard of him. I've got something else to share today from him. And the stuff that we teach, the stuff that we do, this guy, Steve, is adamant that I am insane. He's probably in here with us today. Adamant that I am insane for giving this away. He said, this is something that we should be, that you should be charging for. He said, this is a $200 class, no ifs, ands, or buts. But all right. So let's look at economic reports. I don't have them open yet, but let's go grab a template, a tab, and let's go to Forex Factory. What we got, baby? Well, we got a short week, right? So today, 10 a.m., we had FOMC minutes today. I don't expect to hear much from it, but it is red, right? GDP tomorrow, unemployment tomorrow, a couple of others that are at 8:30. 8:45 tomorrow is PMI, Purchasing Manager Index. Core PCE, which is price index, is at 10 o'clock, along with pending home sales month over month. And then 10:30, you've got crude inventories, right? There is a lot of craziness. Oh wait, I read this as today. My bad. This is tomorrow. There's a lot of craziness. Yeah, nothing today. Exactly. Thanks, Trip. There's a lot of craziness out there when the markets are open and you got reports coming out. If you're in certain stocks, certain industries, you could get slapped, right? So I don't expect to hear anything tomorrow, such as Holy Christmas, the market is falling apart and we're going to have to raise rates again. I don't expect anything crazy, but it will always be a red report. So caution around it. You'll see lighter volume just across the board tomorrow for that, or because of that. Right, market review. Let's go in and look at the SPX. We're going to go over to template number 2, which has moving averages on there. So it happened. It happened. What are we doing here? Why do I have... Where did my lines go? Okay. Well, we had I might have just deleted it a little bit. We had an all-time high right here off of there. And today, we blew it. We blew right through it. We pulled back. I'm not surprised. I'm not upset. It's all good. It's all good, right? I am just fine with the pattern we've got right now. We're back in a true bullish bias. We're getting back to where the moving averages 8 and 21 have a slight spread in them, where the 8's climbing up a little faster than the 21 is, excuse me. So I think it's a perfect setup right now. Would I like to see us close above the 60, 17, 31? Yeah, I would. I'd love to see it. I'm not planning on it. If we do, we do. We don't, we don't. Remember, it's a lighter week. Crazy things can happen on this week, which is why I'm just personally do a lot less trading here. Tripp said, weird that the rate was Thursday due to election and minutes are Tuesday due to Thanksgiving. So much for all things FOMC on Wednesday. Exactly. Yeah, so it's... Listen, they got holidays too, right? Okay, good, Andrew. I just caught that. I was going to send that to you. So thank you. I'm glad. Thanks for seeing that. Yeah, so it's closed its gap so far. Good catch, Jim. You know, for me, it's close enough. It's not perfect, but it's close enough. It goes off close to the low. We're close enough there that we've closed that gap. And that's good. I don't mind that. I would have liked to have seen a little bit of strength now and more of a pullback later. We could use a leg at this point. And I don't mean do you want a wing or a leg for Thanksgiving. We got this move up, this pullback, this here. I need a leg. I need this before my pullback. Right? And we're not, well, I don't want to say we're not having it. We could. I mean, we very well could have it. Again, it's Thanksgiving week. But that's really what I'm looking for, is more continuation, more push, more hype in there to the upside. That's really, 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 really what I want to see take place there. And I don't know on my charts, why do I have 2 daily charts? I am not. So I think I'm just changing the wrong time frame. There is what it is. So here's the daily. All right, because I was looking for the ABC pattern and I don't see it, right? So buttons, let's see. I just want to pull that out a little bit to show that we broke above. Now, we have had 4 resistances around this all-time high. We have this 59.90.58, which is part of my ABC pattern. We have the 6,000. We got the 6,008, which is the fib line. And we have the 60.17.31, which is the all-time high, was the all-time high. We'll just move this line later today after the market's closed. And we'll take advantage of, you know, this high that or comes in today, whatever that might be, right? We're still all in the exact same locale over there. So the thought of breaking through all at once, excuse me, and saying, all right, here we go. It's time to rock on. I'm not worried about it. We did the most important thing today. We chipped away at the ice. And that's nothing more than my phraseology of we broke above the 60.17.31, right? We pierced through that line. The bulls did it. And now they kind of moved on the side and said, okay, here you go. The track is open. The lane is open. Go for it. Bulls, you can now attack and go higher. Strength next week possible when traders are back from time off this week. Exactly, Jim. Yep, that's exactly what we're looking at. Next week will be a very busy week. You may see some higher than normal volume days there as well. Okay. So the S&P is doing fantastic. If we look at the VIX, it took a little bit of a bounce, a gap down, and it bounced up. It has filled its gap, just like the S&P 500 did. But I think on the S&P 500, with these down days, we had a little bit too much of an overreaction in the numbers. It is a full trading day on Wednesday, Brenda. Thursday is the day off. Friday is 1 p.m. Eastern. And the S&P is a true bullish bias again. Yes, Jim, that's exactly it. You're welcome, Brenda. It is a true bullish bias by getting back up above. And we did that here, right? This was Thursday, I think, right? Yeah, Thursday. Thursday of last week, we did that. We toyed around with it. Once again, here, we chipped away at the ice and said, hey, you can break through. We chipped away again the day after. And the next day, we gapped right up through it. With a vengeance is what I said. Verbatim, the words I was talking about. All right? And that's what I would like to see our breakout of this high be, because it's been about 3 weeks now since that break, since that all-time high. So I wouldn't mind seeing that at all. At all. All right. So what do we got happening here this week, guys? We got shortened week. Doesn't mean there's lack of training. So the 25th, which is today, we've got Inner Circle check-in. Today, 25th, I don't normally do them on Mondays. Monster Market Movers this evening at 8 o'clock. Mastermind group tomorrow. That is a 2-hour. For those of you that are here in Mastermind, that is a 2-hour core training tomorrow. Trading News on the 27th. I hated to put this there, but previous week I canceled it because of taking my mother-in-law to the hospital. So there was the only date to put it without going out until December sometime. Fibonacci Trading Mastery Live is going to be on December 2nd is the next one. Power option plays, I will not be doing it tonight. I will do it again tomorrow. Covered Call Explorer trip we'll be doing on Thursday. I will be doing one at the end of the week as well. E-mini Think Tank is on its schedule with the exception of Thursday is holiday, so there is no E-mini Think Tank on Thursday. Power Hour, we're here. Next week we're here. Trading Coaches Playbook, we are not having one this week, so that is canceled. Paul, you could send an email about that to support. Hey, Andrew, can you help Paul out with this question there? PK, ironically, she's back in the hospital. So this is a never-ending OMG. The insurance company refused to let her go to rehab, and in the middle of the night fell down and could not get back up in the bathroom. Thank goodness my wife got up and heard her fall, or else who knows how long she could have been laying in there because she could not pick herself up. So prayers are definitely appreciated for that. Thank you. All right. Thank you, everybody, for that. Okay. So patterns in a flash, guys. You're going to see some emails come out on this, and it is a phenomenal tool. You really should take advantage of it. So go ahead and look for those. And Andrew just did a great job. He dropped that link in there. Jim said CME group site 1218. Sorry, things are moving. FOMC has a 55.9% chance of lowering interest rates by a quarter. So it's there. Yep, no coach's playbook. That's correct, Jennifer. Not this Friday. Market closes at 1. I want everybody to be free and go do your Black Friday and stuff and deal with that. Yep. And again, Tripp is going to be doing Cover Call Explorer this week as well. He'll send that out on the regular day. So I guess he's working on Thursday. I am too, but I am working on Thursday helping my wife for Thanksgiving dinner since we're having it here. Excellent. Okay, good. So weekly topic. Dun, 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 dun. Tariffs and trading. So I belong to 2 mastermind groups myself. They're close, and I belong to 4 mastermind groups. 2 of them are stock market related, 2 more business related. And There's a gentleman in there that is a really good trader. He's an options trader. He's got a little bit of a different style that I do, but he's more of the economist type person than I am. Definitely more. And we got into a conversation about tariffs. And we went back and forth, what good, bad, or indifferent. And it doesn't matter who you voted for, makes no difference. This is not that. Okay. You're going to contend with whatever happens now, whether you like it or not. You voted for the man or didn't vote for him. You're going to have to contend. Well, you don't have to. You can do like Ellen and leave the country, but you're going to have to contend with what comes from this. And there are going to be some potential ramifications. We don't know all of them yet. Although I do believe personally that some of these things are setups on purpose to draw the other side to react in certain ways. All right. So I got literally 2 full pages of text from this guy, Scalper Steve. Okay. I'm not going to hide it or scale into it or any of that stuff. Right. So this was Steve on tariffs, right? Following the 2024 election victory, President Donald Trump has proposed a series of significant tariffs aimed at reshaping U.S. trade policy, bolstering domestic manufacturing. His tariff proposals have sparked considerable debate regarding their potential economic impact over the next 4 years. And guys, don't get me wrong, whether you agree with it or not, keep something in mind. We are at such a deficit with China on what China imports from us versus what we import from them. And we keep telling them, every president, you need to do better. Oh, we will. We're going to impose things. Oh, we'll get it done. It never happens. It never happens. So proposed tariffs, general tariffs, a broad implementation of tariffs ranging from 10 to 20% on all imported goods. This to me is triggered at, hey, U.S. manufacturers, start making it here. Stop importing. Chinese imports, a substantial 60% tariff on imports from China, which he argues will protect American industries and encourage companies to relocate manufacturing back to the U.S. There's goods and bads to that from both sides of the aisle on that, right? But that's what we're looking at with China. I think some of that is to get the GDP up, and then we'll see some of that stuff not happen. Sector-specific tariffs. 25 to 100% on Mexican imports, depending on trade negotiations and policies. You see that word policies in there? I think that's the most important one. I think you're going to see some things about border crossings in there, about drugs coming into the. I think there's going to be some of that in there because we have very strong ties. You know, keep in mind, right? The NAFTA, North American Free Trade Agreement, right? U.S., Canada, Mexico, right? We're not going to want to mess that up too much. I'm not saying it's perfect. We're not going to want to mess it up too much. I think there are going to be other things to negotiate on that these tariffs are going to become a moot point. Now, that's me. I could be dead wrong. Reduce reliance on foreign goods, blah, 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 right? Economic implications. Proposed tariffs are likely to have several economic consequences. Inflationary pressure. Analysts predict that the new tariffs could increase inflation by approximately 1 percentage point. The rise in prices could lead to an annual cost increase for American consumers of up to $2,400 per capita, as higher imported costs translate into higher prices for everyday goods. I get it. Yes, we're going to see some of that, but I think we're at a point that we give too many things away to be done on the outside. We can't produce enough of our own drugs. We cannot produce enough of our own chip technology. We're handing our chip technology to other countries that government could walk in and say, yeah, we don't care that the U.S. government told you and you agreed to keep it private. We want it, right? We've got to protect some of what's out there. Is there going to be some cost up front? There could be. Impact on consumer spending. With consumer spending accounting for about 70% of the U.S. economic activity, the increased costs from tariffs could reduce disposable income and overall consumption, potentially leading to a slowdown in economic growth. Well, it's what the Fed wanted, right? So they'll get it. Retaliatory measures. Trump's aggressive tariff policies may provoke retaliatory tariffs from trading partners like China. China might respond with a 25% tariff on U.S. exports. I would be shocked if they didn't come back with an equal tariff. If we said 60%, they said 60%. Job market effects. While Trump argues these tariffs will create jobs by encouraging domestic manufacturing, historical data suggests such measures often lead to job losses in other sectors due to increased production costs and reduced competitiveness of U.S. goods abroad. Possibly. Conclusion: Trump's proposal tariffs represent a bold approach to U.S. trade policy with the intention of revitalizing American manufacturing and reducing foreign dependency. However, the potential for increased consumer prices, inflationary pressures, and retaliatory actions from other nations raise significant concerns about the overall impact of the economy. As Trump prepares to take office again, the specifics of how these tariffs will be implemented and other long-term effects remain uncertain, but are critical points of discussion among economists and policymakers alike. Now, this first page of all of this was not written as he voted for one candidate versus the other. These are the potentials, both the goods and the bads. This is what could happen and how you might want to have to react to it. Let me just see if any of these comments were. We can pivot on a dime by creating factories and getting labor skills in the U.S. going, but it's going to hurt for a while. Exactly. Did we hear that Walmart said tariffs on China stuff will not apply to them? I didn't hear that, Les. I'd be shocked if it didn't. They could say it, but I'd be shocked if it didn't, unless they're saying they're not buying from China anymore. Jennifer, it's going to be painful. Without a doubt, there's going to be some potential concerns there. Yes, and that is my biggest problem with all of it, Stephanie, is it will definitely affect the poorest of poor in this country, without a doubt. Yes, 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 yes. Right? Without a doubt. Okay. So now, trading with tariffs. Jim said Trump already did tariffs in his first term, 2016-20. It helped the U.S. economy then. Exactly. And they were more targeted, specific industries, specific countries. And we did have China say, no, no, no. Okay, let's do this instead. Right? And come back with some solutions. Whether they were followed or not, I can't say. All right. So trading with tariffs. So the current economic environment characterized by the proposed tariffs and potential inflationary pressures following President-elect Trump, stock market traders can capitalize on options trading through several strategies. Here are some key approaches. The very first one for option strategies is covered calls. This involves holding long positions in an asset while selling call options on the same asset. This strategy can generate income through premiums received from selling options. In volatile markets such as those anticipated with new tariffs, options premiums tend to be higher, making covered calls more attractive. I love when you get higher premiums, but that also means higher vols and higher VIX. Okay, so there definitely is a strategy there. Now, my strategy, very simple. I am a long-term SPY holder, right? I've had it for multiple years now. I believe it's probably, not probably, it is the largest position in my portfolio as SPY of a buy and hold. It's my largest, my largest dollar invested in there, right? Because it's that 8 to 12% a year. It's just there, right? I do not write covered calls on it. First off, I do not want to deal with the capital gains in my non-retirement accounts because of it. I do have some retirement as well, right? Because of that. So what I will do is, because SPY has daily options on them, I will find down days and I will sell covered calls for the day on days that are down, where I am not anticipating it moving back up. If I take in, and I'm only doing it with about a 10 or 15 delta. So if I took in 10 or 15 or 20 cents, let's say I took in 10 cents, my risk would be 20. That my stop is 20 cents and I'm out. All right. It's a strategy that works extremely well, but I don't do it on bullish days, ever. I don't do it in bullish markets, ever. I'm happy to do it on the way down. I'm holding on to the stock and I'm getting paid little bits over and over and over and over and over again. Barry said Chinese items are so cheap that a 20% tariff might still allow them to be very low price. And yes, it agrees it's going to hit our poorest of poor. Yep. So number 2, protective puts. Traders can buy put options to hedge against potential declines in their stock holdings. This strategy provides downside protection by allowing the traders to sell their stock at predetermined prices if the market falls, thus capping losses. So bottom line, folks, here's what I taught for many years to individuals. You go ahead in your IRA and you buy SPY, right? And this is an IRA strategy. You can do it out of IRA, by the way. It doesn't have to be an IRA, right? It's an IRA strategy. You buy SPY long, right? Shares. So you're long shares, okay? You go ahead and you sell you sell a way out of the money covered call a year from now. And then you go ahead and you take that premium and you buy a protective put also a year out. The SPY on average goes 8 to 12% a year to the upside, right? Gains 8 to 12% a year on average. There are years that it goes down. Keeping that into account, 8 to 12 is the average, okay? So longer term thought process. So the thought here is this: if the stock does move and explode up through your covered call price, yes, you're going to give some money back, but there are strategies to buy it back and not have to contend with that. That is not what this strategy is about. This strategy is about if the market falls what was 35, 45, 55% to the downside with this strategy, because you're buying it with OPM, other people's money, and you're dealing with that protective put, you're looking at somewhere around that 5 to 8, maybe 10% cost in there with a 40, 50% drop to the downside, right? That's the value of a strategy like this. What he is talking about with protective puts comes down to the next strategy of collars. So covered calls, protective puts, collars. It's exactly what I just laid out with SPY. A collar involves holding a stock and buying a protective put and selling a covered call. Ding, 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 ding. Winner, winner, chicken dinner. That's the SPY strategy. Volatility-based strategies. Given the expected market volatility due to tariff uncertainties, traders might benefit from strategies that exploit this volatility. Selling options when implied volatility is high can be profitable as premiums are larger. So diagonal spreads, credit spreads, and the likes. Market considerations. Inflation hedging. With tariffs potentially driving inflation, traders might consider sectors that traditionally perform well during inflationary periods, such as commodities or consumer staples. Right? So look at some of those types of things in your portfolio. Sector rotation. Focus on sectors that may benefit from increased domestic production due to tariffs, such as US-based manufacturing or companies less reliant on imports. Right? What's going to happen if, keep in mind, you have chip manufacturers, there's like 11 people working the whole damn factory, right? That's it. And it's the bookkeeper and the janitor, because no one can clean up. You know, they haven't figured out a way to clean the bathrooms with a robot yet. It will, but not yet, right? So when you look at increased domestic production costs, if you move manufacturing to the US of chips, will there be a cost increase? Yes. Is it as dramatic as moving something over here that is labor intensive? The answer is no. And have we already found ways around labor intensive jobs because of prices going up? What happens? California raises fast food minimum wage to $20, and McDonald's comes in and says, ta-da, we have a no person working McDonald's any longer. They take your order with a computer. It is driven out to your car on conveyor belt, out the window to your vehicle. I mean, it's not that these things can't be done, right? It's a cost benefit relationship, right? There's a brand new show out called Landman. I think it's on Paramount. Landman. And it's an oil company. It's a moderately sized company. It's not a Chevron and a Staples and all of that. And the main character is in an argument with an attorney as they're standing by windmills and saying, see, this is what energy should be. Now, she's younger. He's a little bit older. And he says, you have absolutely no idea what you're talking about. Do you have any idea how much diesel fuel goes into making this and running this and repairing this and dot. He said the footprint that it leaves on the earth is more than double the footprint of just to take the oil out of the earth, right? And calling it a clean energy and all of that. Yeah, there are arguments on both sides of it, okay? But those are things that can be done to help offset where I don't need someone to drill it out, to dig it out. And his great line, which I never even considered, he said, if Chevron and Exxon believed that wind or solar were the wave of the future, that's where they would be putting all their money. But they're not. They're buying more land and drilling more holes, right? And again, whether you agree with it or not, listen, I don't agree with someone saying my goal is to find companies that are suffering and take advantage of that. I'm not saying that that's the way you should attack it. But listen, if you find a condition that is caused by market movements and you can capitalize on that, I think you should. And if you still feel that you should, I'm okay with that. I want you to do it anyway. Make the money and give it to the people who suffer. If you don't want to make it because of a plane crash, donate it to the Red Cross. That's make the money, make your $500, whatever it is, and give that money away if you don't feel good holding it or keeping it. I'm okay with that. Right? All right. Global diversification. Consider diversifying investments to include international markets that might not be directly affected by U.S. tariffs, or that could benefit from shifts in global trade patterns. By employing these strategies, traders can potentially capitalize on the market dynamics influenced by the new tariff policies and economic conditions expected under the Trump administration. It's crucial for traders to remain vigilant. And I didn't write this, right? I don't use vigilant. To remain vigilant about market developments and adjust their strategies accordingly to manage risk effectively. All right? So all this was an eye-opener. There's a lot of things that could happen. There are a lot of strategies that you could consider employing out there, right? As markets turn and tariffs start kicking in, it's not going to happen day one. We're going to talk about it, but it's not going to happen. Okay, are we going to put a tariff on what's on the ship already in the water over here? There's going to be a date. There's going to be a date when it happens, when it goes into effect. How much of this needs congressional approval? I don't know. I don't know that much, when it comes to things like that. Nor do I want to. I will deal with CNBC coming out and saying the U.S. government just approved a 60% tariff hike on China. Now I got my answer. I know how I'm trading it. Right? Now I've got the news. My plan gets implemented on what I'm going to do. And for me, it's still very short-term day trades. You notice he did not have any of that on here. Once again, these were option strategies that can give a trader the best opportunity in these markets, right? Selling in a volatile market brings higher premium, which means higher covered call premium, higher naked put premium, right? Higher credit spread premium, diagonal spread premium. Our bear call or our bearish diagonal spreads, which are call spreads, our bearish diagonal spreads are already off the charts price-wise. These just give more premium, more profit potential for them. All right. So guys, give me some feedback because he's asked me to do just that. Was this helpful for you? Is this something that you're looking at saying, wow, didn't consider that, great thought process, opened my eyes, anything like that? Oh, I like that symbol there, Will. Do you know of a website that shows the current tariffs with countries? I don't, Jim, but that would be a good one to find. Nice stuff. Time to wake up. Great insight. Excellent. Helpful. I liked your commentary. Yeah, I got to throw my own stuff in there. Very beneficial. Lots of yeses, lots of ones. Okay, good. Because I do want to give him some feedback. I mean, he's a really good guy to spend his time to write this stuff up for us specifically. And even more importantly, to tell me, yes, I can use it, that he's okay with it. Because that's one of the things about our mastermind is we can't share anything from inside of there. Levied with very large fines if you do. So, unless you have permission, which I do. He sent it to me. So, all right, excellent, good. So let me go ahead and get that off the screen. Then I have better understanding of tariffs now. Good, Brenda, excellent. All right, your stocks review. What candidates do you want me to take a look at? Drop them in. This is our final segment. All right, we got a few minutes left. Let's bring up the charts. Let's go and grab all symbols so I can see Fibbits. QQQ Barry asked for. Okay. Very interesting. I would just want to, I don't spend anywhere near as much time on the Qs as I should, and I own a lot of it. Long-term hold for me. A, B, C, right? We were already at that 100 percentile on this. I would do this more on the NASDAQ than I do on the Qs, right? So we broke right through, came back down, gap down again. We're back up. The open today was right at that 510.28. So 100% increase from where we were. What does that mean? Let me move some stuff around here. Get my drawing tools easier. So A to B, that's whatever the move was, it's 100% of that move. Whatever that was, it's 100%. This is the pullback. And we'll call that 100% A. right? Well, the move from here, from C to this green line, which is really D, that's 100% beat. Meaning whatever this was, it's the same exact dollar amount from the lowest low of that candle there up to this green line, which of course has a confluence of the 509.26 level, right? So overall, very good. So as we look at it, that's the first thing I saw, Barry, when I pulled it up, is we had to be close to the 100 at this point. We're right at that negative 382. If we hit the F11 and scrunch down a little bit on this chart. All right, so we got 509 and 524. 19, that's 14 points. We got 1367. We really should have a -5 in there, so we're going to drop it in. Right? So, and ta-da, look how important it was. Right? 516.59 is our upside target well, my bad. We pulled back. So 509, then 516.5. On the downside, 502.5. Right? We also have our blue zone in here. We got a blue zone here. Right? So there's a lot of strength. There's one down here as well, but I'm hoping not to see that for a long time, if ever again. All right, so there's a lot of strength there. So to the downside, we're looking at that 502 because the 8 will start to curl down a little bit after today. So 502, we're already at the moving average. 500, same level. And then 494 is the next downside target. So I hope that helps on the Qs, Barry. Let me know. Let's see. John's asking for MSTR. Excellent. Good. All right. I got a fib on there, but just massive, massive moves, right? Massive. So we have our fibit is $94. That means it moves $47 a day on average for the last 13 days. $47. So 67 to 467.43. We definitely need to split this level in half. We need a -136 and a 118. The question is that all we need? So this gives me 33 and 4 is 37. Oh yeah, we're okay. We're okay. Oh, hold on a second. No. 93, not 47. It's 93. 467. That'd be 560. Oh yeah, no, we don't need that. Oh, no, not what I wanted to do. Let's take that out. Delete line. Okay, we don't need that. My bad. I had 47 in my head. That was the Wilders, not the Fibit. So right now, I mean, we're pulling back into a bullish bias. We're in a rank of 3. I'm looking at that 382 is the downside. 344 down, the next target down from there. On the upside, we've got 420 and 468. 67, sorry, 467 on the upside for MSTR. Volatile position, John, very volatile position, right? I hope that helps. Let me know. You're welcome, John. Stephanie's asking for COF. Cough, cough. Okay. Let's see. Capital One. So Friday was the day. They had a great move on Friday, pulled back a little bit and bounced. Friday was the day. 182 to 198 is 16, 10. I definitely need to split this puppy. So we're going to add the -136. We're going to need a 118. Both of them. So we're right at that 190 level right now on today's price, which is our 118. For me, I can't do anything until it moves up, pulls back to the 190 and bounces. I'm going to do it as an aggressive trade because we're at a rank of 2 right now, not a rank of 1. I need moving average confluence to be the rank of 1, and we're just not there. We don't have it. Okay. So on the upside, that 198, on the downside, that 182.5 is targets for that. So I like the pattern. I just wish I would have caught this on Friday instead of today. So nice one, Stephanie. Hope it helped. Trader Will's asking for D-Dog. Woo, baby. DDOG is a bullish thrust pattern. Bullish thrusting pattern. Excuse me. Nice overall move. And it's just amazing, right? We had a phenomenal channel going on there. And then finally on Friday, we broke out of it. Yeah, not sure. Not sure why. I don't know what the news is behind it. I mean, Will, aren't they crypto based? AI based. Okay. I don't know why I thought they were crypto. So D-Dog is AI based. Yeah, no sector to look at, no other components to compare it to. Yeah, well, so I didn't even have a fib on it. I had a channel on it until the breakout of the channel. So it will need a fib once we get a pullback. So I mean, well, we can go back and look, but I don't think we got anything back there. If we do, it's got to be pretty old. Yeah, we got to go back to 21 to find levels back that far. So we're at 156 right now. So 159 is a natural resistance, and then we're at 163, which is this recent fib line here. So actually, you know what I would do is at this point, we've got -1 on there. We're going to put in a -1.272. And we're going to put in -1.618. It's back on the top. $46 to $62. That's 16, 11. Yeah, we're going to need a -809 as well in there. So I pull that one out over it. Should it have a new fib? The answer is yes. Do I have a place to draw from? The answer is no. We need it to settle down, get some pullback in there first. All right, so let's pull it back down a little bit now. So we're looking at this, move up, retest, and bounce off that 155 level up to 162 3/4, which is the -1. This is our 809 right here. It's a -809. Right on the downside, we've got. I wouldn't worry about the interim ones here from the channels. On the downside, we're looking at, if you blow through the 154.5, you're looking at 146.5. So we got a little bit of wiggle to the downside there too. So yeah, Brenner definitely needs a new fib. We just need a pullback first. Yeah, and then Jennifer, I hope this helped, Will. Jennifer asked for, where'd it go? Netflix. You're welcome, Will. Netflix, love it. Oh, great. I was waiting for a day like today. Mother told me there would be days like these. We need to pull back. We got to redraw. We're way too high. This fib is getting so stretched out. So dang stretched out. It's getting hard to rely on the levels because of the move. All these interim fibs, it's too much. So we got a nice pullback. We're at a rank of 1, bullish bias rank of 1. So for me, we're just Goldilocks right now. This is gorgeous, right? Give me a bounce, 890. On the downside, if it breaks, retests, and fails, 852 is the downside target. That last one is NVIDIA. So Jennifer, I hope that was helpful on Netflix. Let's see. So we've given back a couple of days after their earnings came out. It's just not as, they did okay, but not as strong as was believed. So 134 is the downside. You got 139 and 144 the upside. We break that 134, we're at 128. I don't think it's a problem getting there at all because that was a major resistance right here. Major resistance at that 382. Right? So there you have it. All right. Excellent. So listen, you still liking the new format? What we're going through? Is it helpful walking through this way and making sure we hit all of these points? Slides in there to remind me not to skip stuff, and format's good. Okay, excellent. Lots of comments about them. Thank you. Yeses and yes. So for everybody out there, have an absolutely amazing Thanksgiving. Enjoy it. Spend the time with family whenever possible. You know, we are the living examples right now, our family, of what the struggles family have, where it looks like my mother-in-law will still be in the hospital. She missed both weddings for my daughters. She missed she's going to miss Thanksgiving, and we don't know what's going on for Christmas time. So it is just crazy. So, but we are going to go to the hospital to and bring her some food and sit with her for a little while. My two daughters will be over and the like, so we'll be over there with that for that. So, but yeah, have a great Thanksgiving. Appreciate all of the prayers. Thank you so much, everybody. God bless and happy Thanksgiving to everyone. So take care, and I will see you back next week for our regular updates. Take care, everyone. See you soon.